StockMinter.com studios here in the Black Hills of South Dakota. I'm your stock minter, Brian Johnson. Okay, it's been like a week, guys, since I've done just a daily video. Been really busy. Once summer hits, things get a little bit more crazy here with baseball and just other stuff. So I play softball, my kids play baseball, and there's just, all kinds of actions going on. So mixed in with that, I've had students. We've been very busy with students, and sometimes they start right after the markets close, and so I have to allocate my time accordingly. So anyway, sorry guys, I'm back in a week, but I want to do a fresher for you now. In the last week, first of all, last couple days, we haven't really missed anything. It's been pretty boring. In the last a week or so, it's been pretty, just pretty bearish here overall. I mean, obviously, looking at the chart, but we're closing in on a bottom here. We really are getting close. Now, I'm sure a lot of you, if you're watching my video, I'm sure you're watching other people's videos, reading other blogs, trying to get as much information as you can. But let me just, and I'm assuming, I don't read a lot of other blogs, but let me just reiterate what you're probably seeing on a lot of other places, and that the answer is yes. I also believe we're getting right towards the end of a particular move. We could be done with it already, as a matter of fact. Now, the last couple days have not shown me that. It hasn't proved that to me. The bulls have made a little bit of a run, about 10 points each day, but really nothing, as you can see from the chart in front of you, nothing compelling. Zero compelling evidence for me to really get on any kind of a bull bandwagon here. So with that being said, I certainly have not ruled out a shot at one more downside move, either back towards those lows or below those lows before it's all said and done with. I myself am very, very neutral right here. I can see a bull case, I can see a bear case, and in that situation, I don't pick. I don't put names into a hat, draw them out, and hope for the best. That's a great way to blow up your account. So if you're new to trading or newer to trading or whatever your case might be, just keep in mind when you develop a bias, one way or the other, where you're absolutely sure, you have to be very careful about that particular bias. I don't mind if you decide that you're bullish or you're bearish, that's great, but you better have reasons to back that up. You better have evidence. You better have, okay, this is what the charts are doing. This is why I'm bullish here. This is why I'm bearish here. You better have sound reasons outside of, I don't know, we've been down for a while. I just think it's time for us to go up. Yeah, I think so. Can you give me more than that? So don't fool yourself into being mega bullish right here, only to get buried by a hard push to the downside, and you're stuck going, now what do I do? Hoping that it comes back. Just keep in mind that if you're going to pick a side, great, but make sure you have reasons for doing so. I'm very neutral right here, but I will tell you this, even though I would not be surprised in the least bit to see us push down over the next couple days, maybe even into the end of the week with some of the economic data that's coming out here later on in the week. That wouldn't surprise me in the least bit. However, bigger picture, I'm not looking for too much more downside left. So let's just say that I'm not throwing everything and anything at the short side if we do go down here. I'm going to dibble and dabble and take some profits and get out and get back in and take some profits and whatever I got to do. So that's going to be my main spiel for you here. That's going to be my main free mentoring advice, and I'm going to give you guys for today's lesson. Now, breaking into the charts themselves, look, straight down. It looks like we are nearing somewhat of a bottom here. As you can see, we've kind of turned around this 12,000 area. These lines here are my next bigger lines in the sand to watch, 12,000 and 12,600. These will be your moves on the Dow going forward. If you want to try to take a stab at something, great, have at it, but you had better put your stops in place, and you had better live by your rules. If you don't have rules to trading, you're gonna get killed. So be very, very careful about that, especially in the position that we're in right now. Let's flip to the daily, take a quick look at this on a Dow. Okay, now the Dow has not gone anywhere. Matter of fact, it's been relatively really weak. Today, 75 points high to low. Really? I mean, really? Come on. 27 points up for the day. Really? Come on. So the Dow looking very, very weak. What it's ultimately putting in here is what could end up being a low base formation. Now the other indices don't necessarily look like this, so we'll give this a low base formation just based on the fact that it's very, very weak right here. But you can see that it's not even made, nor has it made an attempt at all to get back up into this 200. That will be your first level of major overhead to watch on the way back up. Have that marked on your charts and don't miss it. Don't get stuck in something where it hits it and runs away from it and you're like, what the heck did it, what did it just do? Well, it might have hit this. Keep that on your charts. Right now, could be a low base formation, so I'm going to give the advantage to the Bears because they've been, winning the last week or so. You can see the big devastation that we saw. Especially coming into Friday. Major down day on Friday. But consolidating since then. As long as it stays down there, definitely more bearish than bullish. Keep that in mind. From a NASDAQ perspective, look at us kind of wandering our way down slowly but surely. I love the 2440 and the 2560. Watch this 2560 mark here carefully. That is a major area of overhead resistance here on the NDX itself. I love the NASDAQ. Usually when we start to turn, the tech stocks get busy. They really start to get hard and heavy at it too. Apple will probably be one of the first ones to do that. It's not there quite yet, but when things do start to turn, I would expect to see it get pretty heavy to the upside. And then the NASDAQ should be drug along. Even if it goes kicking and screaming, it'll still be drug upwards. Once this thing gets into a flow, though, you'll find that the NASDAQ will lead the way out of all the other indices. Love that kind of move to the upside. Okay, from a daily perspective, look at this really quick. Bouncing down here off of the 200, we are not below it. Notice how the Dow is way below the 200. The NDX has not even broke the 200. Matter of fact, it didn't even really technically touch it, but got down into it here. So we're still well above, looking pretty good. At least a bull pullback here. Not a low base, but a bull pullback, if nothing else, from a bear perspective. Remember that 2560 area? Look at all this overhead up here. This is the one to really, really, really watch carefully as we push our way back to the upside. From a weekly perspective, too, we're only 2 days into it. I'll talk more about this on Thursday, but you can see us wandering our way down even on the larger time frames. Things do not look good necessarily for the bulls quite yet. We're waiting to see if this week is the week it turns around. SPX 60 bouncing off this lower area here, loving this 1265-ish area down here, and then above us 1330 to 1335. These are your big areas to watch. This whole area here, major overhead again, that 1330, 1335. We get back up and above that, and I like our chances to see some further recovery in the markets. Even if we can get back above some of these moving averages, I love our chances to see some further recovery. So even let's say 1300. Even a break of 1300 I think looks pretty good there. You'll notice we're crashing back into the 200. So everything's kind of hodgepodge. NDX is above it. SPX is retesting it. The Dow is well below it. We just can't seem to find any real consistency. But the point is we are back to retesting the 200. Let's see if that'll hold or give some sort of a overhead resistance into tomorrow's trading once this is all said and done. Overall, though, last couple days, as you can see, not a lot of movement. We saw about 7 points today. We bounced off the 1266, so I mean, not too bad. As I said, 20 points in 2 days, 10 points a day, that's not too bad, but not the bullish sentiment that I would be looking for. I really believe, guys, that when we hit that point, we're all going to go, oh yeah, okay, yeah, I think that's it. But this isn't it, not yet. Maybe it comes tomorrow, I don't know, but it's not there yet, that's for sure. Now the VIX on a daily, you can see it pulling back here a little bit, but more importantly, back above the 20 area. That's where I kind of get out of the complacency area into the fear starting to set into the markets area, and we're well established in this 20 and above area. Been here for quite a number of days. This is very important to keep track of. As this starts to drop, then really look hard at that potential bounce in the markets. But it's got to start not only with the price action in the markets, but the drop in the VIX. That will really show a lot of complacency coming back into the markets and fear leaving. You can see what we're banging our head against. Now, if you like the TA on the VIX, I don't technically follow this from a technical analysis standpoint, but you know what? It is what it is. We're bouncing beautifully off of the 50, and we've been bouncing gorgeously off of this 200. So this has been a revisit of this. Now this is a weekly. We've got to the end of the week to see where this candle ultimately closes, but notice that we're trapped very nicely in between the 20 and the 50, or sorry, the 50 and the 200. Also keep in mind we are well established above the 20 now. 1, 2, 3, 4 closes outside of the complacency area. Haven't seen even one close or more than one close since February, and it's been a long time going back to the beginning of the year since we've seen multiple closes above 20, and now potentially 4 weeks in a row. We'll see how this week ends. FAS 60 minute also trying to push itself back up. This has everything to do with the markets and what we've been watching, and the same thing that we're seeing in the SPX is being kind of given back to us here in the financials. Now, I like to follow these financials, but as you can see, are we nearing a bottom? Yeah, I think we're really close. So you FAS, FAZ lovers, I would start, preparing, really looking hard at some of these moves. I don't think I'd get too excited till we're back above these moving averages here on FAS. It drops back into the 67 and below area is kind of like, well, here we go. But that could be that last and final push to the downside. In that case, we're right back to looking, and I'll be right there with you, looking for good entries on FAS or FAZ. I also love to play TNA and TZA as well. I do a lot of those from an ETF standpoint. So as we get closer to what could be a bottom, if you will, I'll definitely let you know about better entries. From today's perspective, not until we get back above the 75 or 78 area, and that is back into the 200-day moving average. Notice how far below this thing we are. I'm not real interested in major bullish till we get back up into 75 or 78, one of those two. We get back into 67, 68, forget about it. I'm not bullish quite yet. We'll have to sit around and wait. Now, the inverse is true of FAZ. We've been following this on the subscribers newsletter actually for the last couple weeks, and really watching carefully this 31 area. So I like this area up here. If we can even somehow get back to it, that would definitely mean more bearishness in the markets, and that could come out of whatever, Europe, banking problems, who knows, could be anything. The point of it is, it does look like we could very, very certainly get one more push up and into, or even above this area here. So I'm going to say watch this 31 area very, very closely. If it starts to drop and gets too far, like if we start to reach the 20-day moving average, I'm going to lose a little bit more of my bullish sentiment here. And then maybe we are once again back into the bounce that we've been, looking for from the bull side. So the 20 here is very important, but that 31 is the one you want to watch to the upside. Takes us back to the beginning of the video. Okay, there you go, guys. You have my take, my abbreviated take on it. I do a much longer video for the subscribers. $28 a month. Click on the ad to your right. It's a great deal. Click on the ad to your right if you're on my website. If you're on YouTube, obviously there is no ad on the right. So sorry, I forgot to put that in. I always forget to put that in. I just assume people are on the website, but I forget I put this up on YouTube as well. So if you're watching this on YouTube, go to my website, thestockmentor.com. Click on any of the ads on the right there. You'll see the newsletter. It's $28 a month, guys. Listen, for $1 a day, it's really, I feel, it's very strong. It's good information to have. At least to help you along your way, especially if you're struggling with, when do I get in, when do I get out? Maybe second opinions. Maybe I want to get a second opinion on where this market's going. I think it's this, but maybe somebody else could give me a better illustration. Once again, I try to back my stuff up with evidence. I don't just try to say, I don't know, I just kind of feel like we're going up. I really try to give you a strong reason. Hey, look at this line, look at this line. On the subscribers newsletters, a lot more lines, a lot more information, a lot more indices. I give you stock picks every week, different stock picks every week. We follow Apple, though, every single week. If you're an Apple fan, you'd love the newsletter from just the Apple perspective alone. You know how fast that moves, so $28 is not hard to make on Apple at all. Even if you don't have a large account, by the way, keep that in mind. Even if you have a $1,000, $2,000, $3,000 account, don't think you can't trade Apple. Apple moves $2, $3, $4 in a sneeze. Today it moved $8 high to low, and if you only had 10 shares of Apple, you could have easily made $40, $50, $60. I shouldn't say easily. That's a little misleading. You could have made $40, $50, $60 alone just in Apple today on a $2,000, $3,000 account. Hey, that's not bad lunch money. And that, would, I mean, just one of those type of days covers you for more than a month worth of the subscribers newsletter. Do it on a consistent basis, and it more than pays for itself in the month that you have it, 2 months that you have it. So think about the newsletter. The other thing is the mentoring. Man, I'll tell you what, if you're really struggling but you want to make this work, you love to trade, it's what you want to do, you got to get an education. It's like, man, I want to be a brain surgeon. Man, I want to be a brain surgeon. Okay, I'm just going to scour the internet and hope that I can get all the information I need to be a brain surgeon off the internet. It doesn't work that way. You need a formal education. You need somebody there holding your hand and telling you, hey, no. Look for this. No, you don't have that line in the right spot. Look, this is what it's going to do to your trading if you don't do this correctly. That's what my mentoring course does. It is an actual course. It's not just, hey, show me your trades and I'll show you what you could be doing better. That isn't how this works. There's actual homework to the course itself. There's actually material to the course itself. Lots of notes, lots of note taking to the course itself. We go into the theory and stuff that you need to understand, you need to know. And if you do know it, you're so much further ahead than the guy sitting next to you that hasn't had that information. Remember, you're not trading against grandma next door. You're trading against some of the best, brightest, and smartest minds in the business. And you don't think they haven't splurged to get an education in this stuff? You think they're just doing it blind and they got lucky? Making a couple of good shots here and there. It's been done by a couple people, but the majority of people have worked their butts off, and they've got the right education to do it. You don't make it in this business consistently just on luck alone. Some people can do that, but most people, 99% of the people out there, cannot. You have to have not just an education, but a solid, good, right education to make it work. So that's what the mentoring course does for you. It allows you to learn more about what exactly you're doing and puts you just way ahead of the competition. Grandma doesn't stand a chance when you're done with the course. Let me put it to you that way. she's toast. So anyway, it allows you to not only handle your own account but your family's account. You can handle your parents' accounts if you need to. You don't have to necessarily take over their money, but you can look at charts for them and say, you know what, really, this isn't something you probably want to be investing in right now. So Bob down at the store that told you this was a great buy, he's full of it. This thing doesn't look good at all. If you can't do that now and be confident, and really be confident in what you're telling yourself and what you're telling other people, then get the education. Write me about that. I'll send you more information on it. We can chat about it on the phone. I'll fill you in. Maybe it's right for you and maybe it's not. I don't know, but I want to make sure that you at least have the opportunity and you know that that's what I do, that's what I can do. So send me an email. Let's talk about it and see if it's a match for you. Otherwise, we'll see you guys again on Thursday. Have a good one.